Hello and welcome to this week's Business Tax Update, where we talk to you about all the news and rumours that affect you, the small business owner. Well, first up, it is IR35. I know I've spoken about this on a few videos and blogs recently, but it's all go as we move towards April. There's been protests, there's been reviews, but ultimately the plans are still coming into play as we move towards April. A lot of our contractor clients have found themselves being served with notices telling them they're now inside IR35 and here are the consequences. And of course, these main changes happen for contractors, freelancers that are working through their limited companies for medium or large businesses. This major change is that right now, the decision of whether you're inside IR35 for your particular contract is now taken out of your hands. It used to be that you self-assessed it. It's now with the actual client to determine that. And it's not gone down well, as pretty much all of them have then blanket decided that you're all inside IR35. For those of you who don't know what IR35 is, there's plenty of blogs and content on this previously, but in this news video, I'm going to keep this down to a minimum, just let you know what's actually changing. The actual news this week is that HMRC have come out with a policy decision and said, we're just going to let you know, in this case, let's say you've been contracting for a while for the same business and now you're suddenly found inside IR35 where you were previously outside, we're actually not going to go back and look at your other affairs. So that's great news. There's quite a lot of commentators, however, that let's say are a little bit wary of that statement, but unless there's they've said unless there's fraud or criminal activity suspected, they're not going to go back and look at this. There is some comfort there, at least for the contracting world. There was also a brief bit of excitement where we heard there'd be a soft landing in April. Now, soft landing is a term that's used by HMRC quite a lot over the years when they introduce a new initiative. And ultimately, it's the same deal here, which just means there were some penalties being banded around for non-compliance, and they're just going to take a view on those as and when, just to make sure everybody gets across the line and deals with their obligations. So unfortunately for the actual contractors and the freelancers, it really doesn't make much difference at this stage. As a side note, one of the things we're getting asked a lot by the small business community is when April comes and these changes come in, are we going to have to do anything with regards to engaging freelancers? Does it change anything for us? Well, we're going to put another video out on that just to clarify. But in short, the answer is no. Actually, nothing for you is changing if you're a small business. The changes are to medium and large organisations, and they've already happened for the public sector where this happened before. So if you're a small business, you're engaging freelancers, it's as it was before April. So the next bit of news in the week is really something I've spoke about on blogs and videos before, but as we're moving towards April, it's a good time to remind everybody, and that's that company cars of the zero emissions variety, so that's quite a lot of electric these days. If you've got a good mileage out of them and they're zero emissions, they're really attractive for company cars right now. So general tax plan for a lot of small businesses is you don't tend to put cars in. The reason is it doesn't work out very tax efficient. Quite often there's other ways of paying for that car that don't involve putting it through the company and have the company own it. In this particular situation though, it opens up a wide variety of things that can be done. And one of the attractive things about these particular cars, if they qualify, is that you get a special set of capital allowances that allow you to offset the cost of the car in year one when you buy it against your corporation tax. So not only are you paying no benefit in this year, you're also going to get a very big tax break. So that makes it a lot more attractive. Now there are qualifying conditions. A lot depends on the exact emissions and the mileage range and a few other things. So just make sure you do your research before you go out and buy a car, just to make sure that the models you're looking at do qualify for these allowances. I mean, if they are purely electric and got very low emissions, they're going to be a very good rate anyway, but this particular zero band is the one you want to aim for. So yeah, that's all there and is worth looking at, I think. A word of warning on this though is that almost every year HMRC put up the percentages of benefit in kind. So I'm presuming that this is going to be short-lived, albeit climate change is a massive deal. Well, it's been a massive deal for years, arguably, but the spotlight's on it very much at the moment and what the government's doing about it. So maybe we'll see a bit more of a runway with this particular cost. But something to bear in mind yet is that ultimately at some point, a later date, these costs are going to creep back up, but they're starting at such a low point at 0% if you really get the right car, that actually you've got a long way to sort that out. You might be looking at getting rid of the car by the time it actually gets incredibly high. So yeah, pretty exciting at the moment, so definitely do your research and have a look into that. And to finish off then, what's been happening in the world of the courts? Well, in this case, as per usual, we've got a VAT one. It's always interesting, the VAT and what goes on in the courts. So HMRC recently lost a case. So at the moment, if you buy a newspaper or a magazine, it's zero rated for VAT. What that means is it's effectively like VAT is charged in it, but you're not really paying any. It's as it sounds, a zero rate. You might think, why can't they just call it no VAT? But for technical reasons, there is a big difference between the two. So they're zero rated. So that's great, no VAT on your newspaper. But a digital copy, so if you buy your Financial Times digitally or some of these other digital newspapers, you do pay standard rated VAT on them. So you've got an extra 20% there that's depending on how you buy them, if you're a VAT registered company or not, might not be deductible for you. So there is a difference between the two. So recently, HMRC lost a court case where the tax judges looked at it and said, no, we think that the digital newspapers shared the same purpose and characteristics as a printed newspaper and therefore should also be zero rated VAT. HMRC have come out this week and updated their policy notice and basically said, look, we still think we're right effectively, so don't worry about this. And of course, they're appealing the court case, so we're going to see what happens as that moves forward. But right now, it's all the same as it was, so there's nothing to get too excited about. But this one's going to be really interesting to watch just to see what happens at the end of it. So there we are. That's you updated on all the tax news this week, and I'll see you on the next one.